Well, good morning or good afternoon, depending where you are, and welcome to the latest in the Russo-British Chamber of Commerce webinar series. Today's topic for conversation is commercial real estate in the UK, and of course, how it's been impacted by the COVID-19 crisis. My name is Alf Torrance, I'm the Executive Director of the RBCC, and today's expert speakers are from Sterling Woodrow, a leading property investment provider. I'm delighted to welcome Gareth Street, Director and co-owner of the company, and Andrew Moores, Head of International Business Development. Thank you, of course, to all RBCC member and friends for joining us today. After I've finished, Gareth and Andrew will make a presentation, and rather than using the chat room function to ask questions as we normally do, if you have any questions, please email them to James Lee at james.lee@rbcc.com. You can get the details on the website, and Gareth and Andrew will either reply to them during the straight after the presentation, or reply them in more detail after the webinar. As normal, we'll be recording the webinar and we'll post it either this afternoon or tomorrow. Gareth and Andrew, a very warm welcome. Gareth, a tough time for most business. How's business for you, and how's the return to work been?
First and foremost, good morning, ladies and gentlemen. Lovely to have you here today with us. So, as you can imagine, it's been somewhat of a rocky road, I guess, globally on an international scale for sure. But you know, we've continued to work straight through. We've been back in the office over the last couple of weeks, and yes, business is good, to be completely frank with you. So certainly moving in the right direction. Great.
And are you going to move straight into the presentation?
So, yeah, absolutely. So, you know, before we go into the presentation, I think there's two types of people effectively that could be watching today. So if you're one of those investors, or you're someone who's interested in investing in a property, or just looking at the market on a personal level, then we can certainly help you. The second type of person that potentially could be out there is a representative from a company, or if you're an agent, then we've got a network of agents that we work with globally, so we can certainly help you guys as well. All right, now, before we go into the presentation, perhaps just a little bit about my background. Okay, so it all kind of started many years ago now, what seems, well, going back to the early 2000s, and ultimately at university in London. Now, I mastered in marketing, and ultimately have used that to, you know, move my career moving forward, essentially. Now, that has been adopted in multiple businesses that we adopt, including our hotels and our commercial interests. But also, I've developed that skill somewhat by working with blue chip organisations for a number of years, and not only being involved in marketing, but also driving the business forward in very defined strategies, and ultimately exit strategy. So all facets of the business to ensure that it's successful. I think we had a little bit of a blip there in terms of what you could see on the screen, but hopefully you guys can see it now.
James, can you turn on the screen sharing, please? It's not letting me screen share at the moment, Al.
Let me just have a look. Now you should be able to share now.
2 seconds, guys, sorry.
Yep. There we go.
Are we all up and running?
It's just loading. There we go. Yes.
Okay, good. So obviously that's a little bit about myself moving forward. Now, why Sterling Woodrow? Okay, well, you know, as Alf so kindly mentioned, you know, we're certainly one of the UK's leading property investment companies, and we work with clients not only in the UK, but we certainly specialise in dealing with overseas clients as well. Our senior management team, obviously including myself and the other directors, we've got over 60 years experience, particularly within UK property and ultimately the commercial sector. So, you know, we provide everything from a tailored bespoke property investment service. We carry out thorough due diligence all the way from selecting the right developers. You know, obviously location is always key in property, you know, location. Obviously, the sectors that we work in are vital. Being able to bring those investments to the marketplace in a way that it's achievable and I guess affordable for our client base. And ultimately, we provide consistent returns. And again, I think one of the key words for today is exit strategy for sure. We walk our clients through from day one all the way from acquisition to ultimately making the money and again, exit at the end. So, you know, Sterling Woodrow, I'd like to think we're at the forefront of trends for sure, and ultimately trying to be ahead of the curve, so to speak. So over the last 12 years, we've been involved in a number of different areas of the market. So for instance, you know, many years ago, we were very heavily involved in, you know, your typical off-plan, also buy-to-let. We're also always carrying out joint ventures in a number of different facets of the business. Some of you guys might be familiar with student accommodation, care homes we've been involved in, and more recently, hotels, and something that we will continue to do moving forward, which we'll get a little bit more, you know, involved in as we go through the webinar. In terms of why we choose the sectors that we're involved in, analysis is key for us. So, you know, of course, you know, we've got our ear to the ground and, you know, we watch the news and so on and so forth. But in terms of in-depth analysis, you know, we follow global investor trends, of course, always, you know, taking into consideration the market environment and ultimately working with our investors long term to ensure that they make money. So something which, you know, I guess brings a wry smile to us all now, and to address one of the elephants in the room, it's obviously COVID-19 or coronavirus. I think, you know, it's impacted us all for sure in one way or another, and you know that's the same within the property market. Now there are a number of different things that have happened, which, you know, some are public and some perhaps you're probably not quite so aware of. And for the first time in many years, as far as I can, you know, ever remember, we're effectively placed where supply is outstripping demand. So for once, we've got, you know, too much buy-to-let residential property available in certain areas with not enough people moving freely. Now, there's a number of reasons for that, but the most obvious one is just the economic effect that typical, you know, families, 2 parents, 2 children have felt. And the reason being, you know, people have been furloughed, they haven't got access. There's also, you know, the mental health issues where people don't want to move around so freely, and that's just impacted the marketplace for sure. On top of that, you know, if you look at what banks have done, okay, prior, so if you could, you know, rewind that clock a little bit, 3 or 4 months ago, banks were willing to lend freely. Now, of course, you know, banks will continue to lend, but there's more stringent search criteria. Also, you've got the deposits. The loan to value is just not as healthy as it was. Realistically, you know, if you're looking to get into buy to let, then in some instances you need 30–40% deposits. And of course, you know, that impacts out, you know, the possibility that people have to purchase property, and as a whole, it slows the market down. Now that's, if you like, the typical buy-to-let or residential sector of the market. Another area which I know that a number of clients that I've worked with and agents and companies over previous years was the care sector. And the reason being, the care sector's certainly been profitable, okay, but didn't come without its risks. You know, none of us had a crystal ball and we couldn't see what was going to happen, but for certain, the care industry has been affected, you know, more so than probably any area of the market, in the fact that, you know, the number of deaths that has happened means that there simply isn't as many people going into the care homes, which means that the returns that were potentially achievable may not be you know, quite so achievable moving forward, and that's just due to the risk element, really. Now, the other elephant in the room, you know, if there wasn't one thing that, you know, the world wanted to throw at us, I'm sure there was a second, and ultimately that's Brexit. Now, Brexit, I've been asked about Brexit countless times over what seems, you know, 2, 3, 4 years now almost. And absolutely, it affected the UK market. However, there's fantastic news that comes from that. And the one area of the market which continued to grow and was actually driven by Brexit was the UK tourism market. Now, there's a number of reasons behind that, okay? And the first and foremost, most obvious, is the weaker pound. Now, the fact that there is a weaker pound, what does that really mean for us and you guys today? Well, what it means is, if you're from the UK and you live in the UK, it means effectively it's more expensive for you to go overseas. So what does that mean? That in turn means that you'll stay in the UK, families tend to holiday more frequently for shorter periods of time because it's more accessible for them. On the flip side of that, it actually drives tourism to the UK from overseas because, you know, yes, it's more expensive for us guys, but it's cheaper, less expensive for overseas tourists and clients to come to the UK. So when you come to the UK, it means that you stay longer and you spend more. Of course, it also means that it's a good time to spend your money on property in the UK because it's cheaper. I think that speaks for itself, really. Now, you know, obviously that we've touched on a few different things that are going on within the marketplace, but, you know, where do we come in? You know, what is it that I guess that we can do to help you achieve your goals? Now, there are a number of different ways, and something that we'll come to in a moment is the landlord versus investor. But what we like to do is create investors, so we can, you know, help achieve your financial goals, you know, resolve those problems effectively without, you know, creating any of those headaches. So what we try and do is shield our clients from the variables. So lots of the property that we get involved with is over a 5 or 10 year plan, for instance. It's very consistent, so you know exactly what you have to pay. There's no surprises. You know exactly what returns you're going to achieve. In terms of returns, you're probably looking at, you know, 8 to 10%. And a key word which I've mentioned a couple of times so far that I think, you know, we definitely take from today is exit strategy. You know, something which is very important is if you need to know where you're going and how you're going to get there, and that's something that we can certainly provide. And lots, as I mentioned, lots of the properties that we're involved in actually have that defined exit strategy, a way for you to sell your property at the end so you know exactly how much money you're going to make. That's something that we've certainly adopted within our strategy, and something that we apply on a daily basis when we're acquiring our commercial property, and in particular the hotels that we're working on. So as I mentioned, look, if there's a question that you could sit there and ask yourself, you know, today, then certainly that would be, who are you? You know, are you a landlord or are you an investor? You know, what's your mindset? And I think that's key. So just to touch on a couple of the different points here. What is a landlord? Now, a landlord can absolutely make money. You know, there's no denying that. However, a landlord, depending on the size of your portfolio, effectively means that is your profession. Now, you know, that doesn't work for all of us. And for that reason, there are a number of different aspects that come into play. So a landlord would be responsible for obviously sourcing the property. Ultimately, they would deal with all of the costs associated with that. They would absolutely be exposed to market conditions, you know, house prices rise and fall. They would also be exposed to void periods, management, maintenance, service charge, ground rent, you know, those kinds of things. And again, you know, absolutely you can make money from it, but it's something that you should be aware of if you're going to go down that road. Now, the other side of that coin, okay, are investors. Okay, so investors are slightly different. Yes, the aim is the same. Ultimately, the aim is to, you know, grow your portfolio and make money essentially. But what are the differences? Well, the difference is they certainly don't want to deal with stress. Okay, they deal with consistency. Okay, so you know exactly what you're going to get, come rain or shine. You get fixed returns. You have a high yearly profit, and you've got that assured capital appreciation. Also, there's no surprises. You know, investors effectively want to sit back, have that armchair experience, but still get the same rewards. And that's something that you know, we strive to achieve at Sterling Woodrow, without doubt. So which one are you? So just think about that before we move on. Now, we touched briefly on the UK tourism market. Okay, so if you look to the right of your screen, you know, you see some figures there which I think speak for themselves. I think one of the key things that really defines the UK tourism market is the fact that many people, you know, from all over the UK get to experience different aspects, you know, whether it's the culture, the history, you know, the great British seaside with the great British weather that we have. But it really has continued to grow. I mean, to give you an idea on some of the figures, British people spent just shy of £20 billion on short domestic trips within the UK. And a lot of that money obviously is spent within tourist hotspots. And what you've got to think, if you apply common sense, when people go on holiday, they need somewhere to stay, which is one of the reasons that hotels have worked so fantastically well for us over recent years. So what does the future hold for the UK's tourism industry? Well, it's a very interesting question, you know, and I think if you asked me this question 3 or 4 months ago, the answer would actually be very, very similar. Now, the UK's tourism industry has continued to grow. Okay, yes, it's been put on pause for a few months, no doubt, but because it was so robust and growing at such a rate before, it will also be one of the quickest industries to recover. So to give you an idea, you're looking at around, you know, 4 to 5% growth every single year, and that's going to continue to, you know, around 2025, and that pace is only going to get faster. One of the reasons being, you know, if you look at, you know, the great British mindset, we all want to get out. So, you know, as soon as we're allowed to have that opportunity to go back on holiday, the urge to perhaps go overseas is probably not quite where it once was, but absolutely that the ability and the want to go out, you know, in the UK and holiday and those short trips like we just briefly mentioned, that desire is absolutely still there, and you know, it will continue to ensure that the tourism market grows. So why hotels? Okay, well, as I mentioned, you know, naturally we've all stayed in a hotel at some point, and you know, we all know that it costs money to stay there. So as an investor, you know, you can reap the benefits of that. Now, some of the benefits of investing in hotels, effectively, it's a mix between residential and commercial. Okay, it's lucrative and it's something that's recognised and understood the world over. So if you look at, you know, 2018 and 2019, the UK hotel sector was growing. It's as simple as that, and it will continue to grow as we recover. And again, this goes back to the fact that we had a weaker pound, okay, and more tourists from overseas were coming in to the UK. Now, something which, you know, I certainly experienced in my life is if you go to a hotel this year, you might expect to pay, you know, £100, £150 to stay there. You know very well, regardless of what happens in the marketplace, that when you go to stay there next year, it's going to be more expensive, even if it's only by a few pounds. But that's great news for the investor, because effectively the average daily rate, i.e. the cost that you have to pay to stay within the hotel, it goes up every single year. It's as simple as that. So moving on. Now, the Staycation Stampede, fantastic phrase, okay, but it really is a stampede, there's no doubt. So, I mean, if you look at, you know, again, what's going on and the way that British people are holidaying within the UK, many young families will continue to travel, but again, they'll look to travel more frequently and stay for, you know, a shorter period of time. To give you an idea, some of the figures that you can see on your screen today, around 90% of UK holidaymakers plan to stay in the UK. Now, everything that's been going on, again, you know, the world has changed, but what it's enabled people to do is to have a little bit of a better look closer to home. So, you know, if we look at some of the figures on the screen, 8 in 10 people said that before lockdown, their appreciation for UK beauty has gone up. And, you know, I couldn't speak more so myself. You know, when you go outside, you see what's on your doorstep, for once in your lifetime.
So what are we seeing in the media lately? So the reality is it's going to cost more money to travel. It's as simple as that. And if you take airlines such as EasyJet, Ryanair, British Airways, they're all under intense pressure right now in terms of their cost base, in terms of the getting people on those seats again. So there's some real social distancing issues that's got to be overcome. Tabled with that, you've got also confidence issues with the consumer. So over the last 3 months, when people have been trying to get their money back and been offered credit notes effectively, it's been a really difficult time for consumers when they need their money most in their pocket, with the airlines and tour operators holding on to their money for that extended period. So there's been a loss of confidence within those foreign travel operators in terms of working with the client. So that also puts people off traveling. You're also going to have the older generation who are more susceptible to risk. They're going to be a lot more off-put, and then they're going to flock back to the UK to spend their vacations here. So there's a lot to consider when you talk about the cost of travel, the confidence in travelling, and the ability and how long it will cost over the coming years. Just to underpin everything that we've been describing in terms of the staycation, I'm sure I probably don't need to tell you who Crony are. They're a luxury travel operator. They're based out in Switzerland. They've been established for well over a century now. And it is now their perfect time to look at the UK as a destination of their choice. And these guys are famous for island hopping around the South Pacific or Asia, really romantic, beautiful getaways. They're now really focusing, and this was picked up not just by the Telegraph, but multiple news outlets. So this made a big splash about 2 weeks ago when it was when they gave the press release. Their itineraries are now really focusing on the island's wide Atlantic Way, the Gower Peninsula, which is very, very appropriate for us, and rural Northumberland. And I'll come on to why that's appropriate for us, the Gower Peninsula, shortly. So just to kind of sum up, Gareth talked earlier about the due diligence our marketing team does, which we believe is world leading. We make sure we find properties which have got a proven track record, in some cases 20, in one case 60 years. We ensure they're fully functioning. They have a full management team in place. They offer high yields, as Gareth said, between 8–10% in most cases. Low entry price points, so we're looking at £60,000. Got to move quickly for those ones, but they can start at 60, right up to 70, 80, 90,000 pounds. We described the low risk, so our due diligence that we're taking you through. We will then feed the assured quarterly returns, and Gareth talked about the exit strategy. In our hotels, they offer the exit strategy of a buyback, and in most cases you're looking at 115% in year 5. For investors on the line or people that work with investors, we can pay to any account in the world, which is surely giving your clients or yourself a safe haven for your money, which is generating income from day one. I just wanted to share a live example, and this comes back to the Crony slide. So this hotel is actually in the Gower Peninsula itself. So when we talk about location, well, that's been literally flagged up by Crony. And pretty much trust what they got to say when it comes to travel destinations. When we talk about proven track record, it's been there for 20 years. When we talk about the returns on the screen, we've got 10% net returns, 115% buyback, and room start for £70,000 in this one. It's got a certificate of excellence, so we are working with high class property that doesn't need to be turned around or a lot of effort in terms of reputation or rebuild. So we can see on screen right there that this actually underpins all the hard work and due diligence we've done, and it can take several years to find property of this status, but that's what we constantly are working on all the time. Just to give everyone on screen is a typical example of a room, say £80,000. You can see the gross income that you're going to be receiving is £666.25 a month, or £7,995 a year. That equates to 10% net. Now, so important to remember, there is no ongoing cost with these hotels that we operate. So there's no expectation around service charges, management fees, ground rent. or any annual charges whatsoever. So at the bottom right, you'll see the net return is £38,967.50p. So that's a return of 65% over that 5 years, because you factored in a 3% growth in your capital appreciation there. So really, really powerful numbers, and we hope that investors get to see that what is a very modest income at the beginning with an £80,000 investment is certainly yielding big numbers at the end. Gareth alluded to, we've invited a mix of people on the call today, which is anywhere from investors to companies. So we just want to emphasize the fact that we're used to working with business to consumer. So that's the first time investors who will make contact through our webpage or through search engines. We all work with our repeat investors, so people that we work for, probably from that same way the first time investor becomes a repeat investor. We also work with international investors who are introduced through clients that we've worked for before, as well as high net worth individuals who will buy sort of 5 to 10 units per development we work on. Working with the international development, what I do is the business to business side. So I work with, and it's my job to vet anyone that we work with, any agents or brokers, to make sure they uphold the same values and principles. And I'll go on to the next slide why it's really important to us in just a moment. I work with wealth fund managers, I work with financial advisors, family offices, as well as financial institutions or pension funds. So if any of those sound like you, then please get in touch toward the end. So it's really important in terms of our values and what we stand for as a company. Reputations are hard fought to get, and as is 12 years in the making. So we have ventured on this year one of the most exciting journeys, which is transparency and consumer feedback. So on the right hand side of the screen, you'll see our Trustpilot rating. Excuse me. So that's for Sterling Woodrow as a company, and our feedback towards the team that we work with. And on the left hand side, you have the TripAdvisor. Now, these are for the hotels that we work with, and you can see on the left hand side, just give you some example, between the two hotels we've worked with, there's over 2,000 excuse me, impartial reviews giving good or excellent feedback. And I've been working with the RBC for the best part of this year in terms of our affiliation with these guys. So really, really proud to be part of the RBCC. And that brings us towards a close. Our details are on screen there now. You're welcome to get in touch or through James.
Guys, so that kind of brings it to an end. I hope that you found the information there useful. Just like you to pass myself back over to Alf and see what questions you've got.
Andrew and Gareth, thank you very much for that really interesting presentation and very interesting business model you guys have got. I'm not an expert in property, but I've got a few questions on that, so provoked a few questions. If you do invest in the scheme, do you actually own the room, and who actually owns who handles the process?
Yeah, so yes, it's a very straightforward process. Good question though, for sure. Absolutely. So without question, you own that individual room or rooms, depending on how many that you buy. You get full title deeds, okay, registered with the UK Land Registry, and the purchase process is exactly the same as buying any property. So there's solicitors that are appointed, they go through the conveyancing process, and from reservation to completion, it typically takes around 21 to 28 days. From the moment that it completes, you own that property and it's income producing from day one.
Okay, that's pretty quick. And the buyback, what's that about? I don't quite sort of understand how that fits.
Go on, Andrew.
So the buyback, so the reality is the investor needs some capital return as well, a capital appreciation return. So that is built in as an incentive more than anything. So the hotel gets control of the asset back eventually. So it's a figure that is 3% excuse me, per year, and then ultimately that is 115%. So that's all your capital back plus that appreciation. because the reality is the hotel wants to use that money to reinvest into its services and use it for 5 years, but eventually it's going to want all the returns, from the income of the hotel. So it is an incentive there for the investor to release that room, and it works both ways. So the investor can sell it to the hotel, and the hotel can buy it from the investor as well, and it's built into your legal pack at the beginning.
Great. Gareth, I'm not sure if you've had any questions online. I've got one here. Are you prepared to take? Are you happy to take it? Or
absolutely, sure.
Yeah. Okay. It's from Salim Tatal, and he asked. You mentioned that you invest in PBSA, and he's asking whether you've had any offers.
Any offers?
Yeah.
Oh, okay. Sorry. Right. Okay. Yeah. Absolutely. Yeah. So we're approached almost on a weekly basis by developers that want us to effectively have joint ventures with them on student accommodation. We're always open-minded, but obviously, as I mentioned, the due diligence that we carry out means that we're very, very selective on who we work with.
Cool. Yeah. And if you wouldn't mind, can you just sort of expand a bit on how you work with family offices? Obviously, that's an area the RBCC works with as well.
Would you like to take that?
Yeah, so it's something that I've worked with quite closely. I use LinkedIn quite heavily. You can find me on there. And we're trying to find joint ventures for their clients to either, before the pandemic, there was a lot of work we were doing in terms of finding sites in London, for example, maybe boutique hotels. I don't want to give too much away, but we would buy the hotels as a JV. The family office would come in on the front end, and we would do the same model as what we're doing here. So we work on that operation, which is basically sourcing on behalf of the family offices. So that's what we can work on. We work with agents as well who maybe have a client that doesn't have the family office fund kind of level, but certainly has several million that would want to buy several rooms. So it could be agent, broker, or family office I work with.
Yeah. Thanks. Have you received any? I'm not privy to the emails. Have you received any emails?
Possibly, just have to filter through 2 seconds.
Okay.
There's probably, when you've got situations like this, investors tend to ask very similar questions. I think that the purchase process, as you mentioned, is one, and the ownership and the title deeds is another. I think another key question is the length of the lease. And it's typically in these cases it's a 250-year lease, so you've got that peace of mind. Again, it's the same as owning any buy-to-let property on a lease in the UK.
Yeah, and I suppose an obvious question is any additional costs to the scheme?
No, there's no additional cost. So it really does do what it says on the tin. So from the moment that you've invested, that's it. There is a solicitor's fee, which is £1,000, but there's no stamp duty, for instance, because it's exempt. You never have any service charge. There's no ground rent. You just get the benefits of that 10% rental income. As Andrew mentioned previously, it's paid quarterly in arrears. And in 5 years' time, you get all of your money back, plus, of course, that additional uplift.
Another question I get quite a lot, Alf, and maybe Gareth can expand on it, is why we don't choose London. And the simple reality is it's very expensive. So the returns that we work hard to get for our investors, they're in provincial towns where we know there's going to be tourism, come rain or shine, literally, in the winter and in the summer. There's events that can be occurring nearby, so it could be stadiums, it could be football, horse racing, all year round turnover, which we can get the 10%. So the property in London, and Gareth will maybe expand on the price of London and the returns that might give.
Yeah, so of course we're always looking, and that's a question that it comes up on a daily basis. To be completely frank with you, have you got anything in London? Well, we purposely, as Andrew mentioned, we purposely do not target London at this moment in time. Might change moving forward, but we look for the higher returns and the possibility of making it accessible to more of our clients. So, you know, if you look at the locations that we've done previously, like the Lake District or the Gower Peninsula, not only have you got the tourism there, but they're established market towns that offer, you know, excellent rail links, excellent travel opportunities to major cities. But in turn, it's not just the tourism. You know, I think it goes a lot deeper than that. That the areas that we pick are underpinned by business. It's as simple as that. So that, you know, that's the bread and butter. You know, during the week, you know, you've got that Monday, Tuesday, Wednesday, businessman, traveller, they need somewhere to stay. So we'll service the businesses and the companies typically throughout the week. And of course, you know, at the weekends, your target market's tourism. So the locations that we pick tick both those boxes.
Thanks, yeah. Great. We've had, we're getting a few questions coming through the chat room.
Sure.
Do you want to, I know you had a preference for doing emails afterwards, but
that's fine. God, I mean, we've got time.
We didn't want to overrun. That was the thing. So.
Yeah. Okay. It says a question from Ayushi. Do you deal with Airbnb properties?
Okay, it's a good question. We do in some facets, in the fact that, you know, some of our hotels have been listed on Airbnb in terms of getting reservations, but in terms of, you know, that's not our model. To be completely frank with you, that's more of a buy-to-let and holiday market. And as I said, we try and cover both bases in terms of business and that tourism market. So we feel hotels ticks that box better than just the typical, you know, property, for want of a better phrase.
Okay, thanks. We have another question here, and it's quite a general update, and I'm not even sure you deal with that particular area, but asking for an update on Stratford-upon-Avon for a very focused question. I don't know if you.
Yeah, so that's one of the someone's definitely got their ear to the ground, which is a good thing. So that's one of the new properties that we're working on. Yeah, absolutely, it's moving in the right direction. Unfortunately, it's like anything over the last 3 months. You know, the world kind of come to a halt. But yeah, we're moving in the right direction, and that'll be, you know, it's coming to a close or fruition very, very soon over the coming weeks.
Great, good. That's the questions I've got. Anything on your side?
And I think the best way moving forward, you know, as I said, just to reiterate, we work with clients and agents from all walks of life on all parts of the globe. So, you know, if anybody, you know, wants to understand more about what it is that we're doing, obviously they can reach out to you guys, and I'm sure you'll put them in contact with us. Or, of course, our details are on the screen. And from what I understand, you're going to post a webinar as well. So, you know, there's a lot more that can be done, but I think, you know, it gives an insight into you know, what's going on in the marketplace right now.
No, absolutely. No, it's been a fascinating talk, and as you said, we will forward any further questions we get to you, and then of course, if anyone wants additional information, they can get your details from the webinar, which is posted. In the meantime, Andrew and Gareth, thank you very, very much for coming in. That's been a really interesting talk. And thank you, of course, to all our listeners. I'd just like to remind you of our ongoing webinar series. As you know, we have talks or webinars every week. In fact, this week we've got two. We've got another one tomorrow, which is embassy outreach, where you'll be able to hear the ambassador and the head of Department for International Trade in Moscow give you an update on the situation as they see it, and post any questions to them as well. But in the meantime, thank you very much. Have a fantastic day.
Great to be on here today.
Thank you everyone for joining in.
Thank you very much, guys.
Thank you. Take care. Speak soon. Bye-bye.